Hello, everyone, and welcome back to Dinar Flash News, your reliable source for staying completely informed and tactically ready for every major progression concerning the Iraqi dinar. Today, we are initiating a thorough examination into one of the most commonly debated and keenly awaited possibilities within our community. We invite you to envision a future moment, perhaps a calm morning in 2025. When reports finally confirm the Iraqi dinar has formally changed in value. For years, holders have anticipated a revaluation event. However, once the initial thrill subsides, the practical truth emerges. The central inquiry then moves from when to how. Specifically, how would major financial institutions like Chase Bank manage the exchange of this currency? This transcends mere hope. It is about comprehending the logistical framework of the U.S. banking system. To genuinely grasp how an exchange event could materialize, we must view the situation from the perspective of a major institution like Chase. It is essential to recognize that banks function on stringent protocols, not sentiment or speculation. While a dinar revaluation remains a possibility rather than a certainty, historical precedent indicates major financial entities do not delay forming contingency plans until the last moment. Behind the scenes, it is very likely that internal procedures are being discreetly architected to manage surges in foreign currency activity. These institutions are businesses first, with the primary objective of serving customers efficiently without interrupting their standard operations. Should a global rate change occur, banks must be prepared to activate a system that guarantees security, compliance, and order for all parties. Consider the immense volume of traffic a revaluation event would produce. If the dinar's value were to increase suddenly, millions of currency holders nationwide would presumably rush to their local branches at the same time. This presents a logistical challenge banks are keen to avert. Most local branches are not equipped to manage mass redemption events with hundreds of individuals queuing for complex foreign currency exchanges. Consequently, industry analysts assess the high probability of Chase and similar banks enforcing strict daily exchange limits. These limits, frequently called exchange caps, would not be instituted to penalize investors, but to regulate the transaction flow and ensure a branch does not exhaust its resources or operational bandwidth on the opening day. The principle of exchange limits is founded on the need to preserve liquidity and stability across the branch network. If a bank permitted an unrestricted first-come, first-served environment, a small number of early individuals could potentially overburden the system, leaving no capacity for the thousands that follow. By implementing caps, the bank guarantees a fair and equitable distribution of service. This tactic effectively flattens the demand curve, enabling the bank to process transactions methodically over weeks or months instead of confronting a disastrous bottleneck within 48 hours. For the investor, grasping this potential reality is critical. It alters the mindset from expecting an instant payout to preparing for a structured, managed liquidation process. Beyond the logistics of crowd management, the single most substantial obstacle every dinar holder will encounter is the wall of compliance. In the contemporary U.S. financial landscape, regulatory adherence is absolute. Every transaction involving foreign currency is subject to intense scrutiny under Know Your Customer (KYC) and anti-money laundering (AML) laws. These regulations are crafted to prevent the financial system from being exploited for fraud, tax evasion, or moving illicit funds. Chase Bank, operating under the vigilant oversight of federal regulators, will almost certainly demand a robust paper trail for every dinar note presented for exchange. This is where the distinction between a prepared investor and an unprepared one becomes glaringly and painfully evident. What does this compliance process actually entail for you? It signifies that merely arriving with the currency may be insufficient. Chase is anticipated to require proof of legal possession and proof of purchase. This implies you must have your original receipts from the vendor where you acquired the dinar, alongside any certificates of authenticity that came with the transaction. For many, this is an alarming realization, particularly for those who purchased their currency over a decade ago and may have lost their paperwork. Without these documents showing the origin of the funds used for the purchase, Banks possess the legal authority to postpone or completely refuse the transaction until the legitimacy of the holding can be confirmed. The compliance measures extend further to include valid government-issued identification and potentially a more in-depth interview process for high-value exchanges. Bank representatives may pose specific questions regarding the source of the funds and the intent behind the transaction. This is not personal, it is a systemic mandate to ensure criminals are not exploiting the cover of legitimate currency revaluation to launder illegal money. If you are holding dinar, the time to organize your files is now. Searching for a faded receipt from 2011 on the exchange day is a recipe for stress and potential failure. Preparation in this regard is not merely helpful, it is likely the prerequisite for participation. Another critical layer to this scenario is the concept of tiered banking, a standard practice across the global financial industry. It is important to acknowledge that during a high-pressure event like a currency revaluation, not all customers will be treated identically in the initial rollout. Banks like Chase categorize clients based on their relationship history, account balances, and standing with the institution. Customers with established private banking relationships, business accounts, or long-term personal banking histories are frequently granted priority status. This isn't necessarily favoritism in a negative sense, it is a risk management strategy where the bank prioritizes entities they already know and trust. This reality underscores a strategic move investors can make right now in 2025, establishing and maintaining a healthy relationship with the bank. If you walk into Chase branch as a complete stranger with no prior account, carrying a significant amount of foreign currency, you represent a higher compliance risk than a customer who has banked there for a decade. The existing customer has a verifiable history the bank can access instantly. Therefore, opening a checking account and maintaining it in good standing could be one of the most astute preparatory steps you take. It integrates you into the system, potentially granting you access to faster processing queues or higher transaction limits when exchanges commence. Let's dismantle the cinematic image of what the actual exchange moment entails. Many people imagine walking into a bank, placing bundles of dinar on the counter, and exiting with briefcases full of US dollars. In reality, this is nearly impossible. Chase Bank will not be distributing massive stacks of physical cash on the spot. Modern banking does not function that way, especially with large sums. Instead, the exchange value will almost certainly be credited electronically to your bank account. This digital-first approach allows the bank to maintain security and creates a necessary buffer period to finalize verification of the currency itself. The verification process at the counter will be rigorous and technological. The bank will likely employ advanced scanning systems and automated verification tools to check the serial numbers and security features of the dinar notes. This ensures the currency is official, valid, and not counterfeit. In instances where the exchange amount is particularly large, the funds might be credited to your account but placed under a temporary administrative hold. This does not mean your money is frozen or confiscated. Rather, it is a standard banking procedure to allow time for back-office compliance teams to authorize the transaction and for the funds to clear through the Federal Reserve System. Managing liquidity is another paramount reason why physical cash withdrawals will be heavily restricted. If the dinar rises in value, turning modest investments into considerable wealth, the sudden demand for physical cash could drain a bank's vault within minutes. Banks keep a limited amount of cash on hand based on average daily usage. A sudden spike in demand caused by a currency event would shock the system. Therefore, Chase would likely enforce strict daily or weekly withdrawal limits for cash, encouraging customers to utilize the funds electronically via debit cards, wire transfers, or cashier's checks instead. This ensures the branch remains operational for all other customers. This focus on liquidity management is essential for the stability of the entire financial ecosystem. Banks must balance the physical cash they hold against the electronic credits they issue. A rapid shock where millions of dollars are demanded instantly in bills could trigger local shortages and panic. Chase Bank would work proactively to prevent any such imbalance by controlling the outflow of physical funds. Temporary restrictions are a tool used globally during high-volume financial shifts to maintain order. The goal is never to deny you access to your wealth, but to ensure its processing is secure, steady, and does not collapse the local banking infrastructure. It is also vital to consider the role of the United States government in this process. Chase Bank operates under strict federal supervision, and when a revaluation conversation becomes reality, government agencies will be involved immediately. High-value currency exchanges trigger automatic reporting to the IRS and other regulatory bodies. This means tax responsibilities will be a major factor in your post-exchange reality. While the bank's job is to process the transaction, they are also deputized to report the movement of significant funds. This data collection is automatic and unavoidable, serving as another reason why your documentation must be flawless. Due to these reporting requirements, tax advisors often recommend that investors prepare now by maintaining a complete ledger of every purchase. This includes dates, amounts, payment sources, and exchange rates at the time of purchase. If the government requests proof of your cost basis to calculate potential capital gains taxes and you cannot provide it, the situation becomes complicated. The bank may have no choice but to delay processing if there are discrepancies in your account or paperwork. The difference between a smooth transaction and a bureaucratic ordeal frequently hinges on the quality of the records you have maintained over the years. We must also examine the potential for a phased rollout of exchange services. It is highly plausible that Chase would not open the floodgates to everyone on day one. To manage operational stress, they might implement a tiered schedule. Phase 1 could be exclusively for private banking clients and high-net-worth individuals, allowing the bank to test their new systems and exchange rates with the smaller, known group. This soft launch enables them to identify glitches and refine compliance workflows before expanding the service to the general retail public in subsequent phases. For the average dinar holder, understanding the possibility of a phased rollout is crucial for managing expectations. It means you might not be able to exchange your currency on the very first day the rate changes. You might be assigned a specific window or appointment time based on your customer status. Those who attempt to bypass this system and arrive unannounced may face long lines and rejection. By contrast, those who have communicated with their bank representatives and understand the schedule can position themselves to act when their specific tier is called, avoiding unnecessary frustration and wasted time. Let's return to the subject of daily caps, as this is often the most misunderstood aspect. If a limit is imposed at a certain amount of dinar per day, large-scale holders will need a strategy. You may need to visit the bank multiple times over several weeks to fully liquidate your position. This structure prevents you from triggering certain red flags associated with massive one-time dumps of currency, and it helps the bank manage its daily reserves. Being aware of these potential caps allows you to develop a realistic timeline for your finances rather than expecting instant access to the full sum. Operational bottlenecks are another reality we must face. Even with the vast resources of a giant like Chase, systems can crash and human verifiers can become backed up. A large influx of IQD transactions could create temporary delays in the digital networks used to clear funds. Banks prioritize transactions based on necessity and relationship, meaning that during a bottleneck, a long-term business client might see their funds clear faster than a new walk-in customer. Patience will be a virtue in this scenario. Technology facilitates the trade, but human oversight ensures its legality, and that human element takes time. We also need to address the psychological aspect of this event. The transition from holding a physical note to seeing numbers on a screen can be jarring. The realization that you cannot simply walk out with cash might disappoint some who viewed this as a cash-out event. However, seasoned investors understand that wealth in the modern world is digital. The stability of the banking system benefits you more than the chaos of a cash grab. A stable bank means your funds are safe, insured, and accessible through proper channels rather than being vulnerable in physical form. Strategic planning involves considering your post-exchange liquidity. Since cash withdrawals will be limited, you need to plan how you will move and use your funds electronically. Will you transfer to investment accounts? Will you pay off debts via wire transfer? Understanding that your access will be primarily digital allows you to set up the necessary accounts and pathways beforehand. You don't want to be figuring out how to wire money on the exchange day. You want those routing numbers and destination accounts ready to go. The role of the bank teller versus a specialized wealth manager will also become apparent. For standard amounts, a teller might suffice, but for significant revaluation windfalls, you will likely be directed to a foreign currency desk or a private banker. These specialists are trained to handle the complex compliance requirements of large transactions. Establishing a rapport with personnel at your local branch now can give you insight into who handles these transactions, saving you from being bounced around from person to person when the lobby is crowded. Furthermore, we must not ignore the potential for variations in exchange rates. While there will be a global rate, banks often have a buy rate that includes a spread or fee for their service. Different customer tiers might qualify for better spreads. A private banking client might get a rate closer to the market midpoint, while a retail customer might pay a slightly higher fee. This is standard industry practice. Knowing this helps you calculate the true net value of your exchange rather than relying solely on the number you see on forex screens. Ultimately, the narrative here is one of empowerment through knowledge. The scenario of a Chase Bank exchange in 2025 is constructed on the building blocks of existing banking logic, regulatory requirements, and historical precedent. None of this is a guaranteed prediction of the future, but it is a logical roadmap of how regulated entities operate. The dinar story is often filled with emotion, but the banking side is purely mechanical. By understanding the machine, you can ensure you do not get caught in the gears when it finally starts to turn. To conclude this deep dive, the key takeaway is that waiting until the news breaks is too late. The investors who will benefit the most are those who treat this as a serious financial operation today. They are organizing their receipts, securing their identification, building relationships with their bank, and mentally preparing for a structured, compliant, and digital exchange process. At Dinar Flash News, our goal is to ensure you are in that first group, confident, prepared, and ready for whatever the future holds. Thank you for joining us for this important guide, and stay tuned for more updates as we continue to monitor the financial horizon.